Every year, investors around the world try to figure out what's next for China's economy. It's a huge puzzle. But what if Beijing what if they just handed you the answer key?
And that's not just a hypothetical. That's the big question we're digging into right now. Because, what if you could actually see, with real clarity, where the world's second biggest economy is placing its bets for the year ahead?
Well, they did. And this is it. It's the readout from something called the Central Economic Work Conference. Now, this isn't just another press release. You've got to think of it like the annual strategy meeting for China Incorporated, where the game plan for the entire economy gets locked in. If you're doing business with China or investing there, this is non-negotiable reading. So we've broken it all down for you. Let's jump into the 3 biggest signals from this year's meeting.
All right, first up, and this is a big one, is a real shift in philosophy. For decades, China's economic story was all about one thing, that big headline GDP number. Well, that era's over. The new mantra, it's all about quality, not just quantity.
You can really see it right here in the language. And believe me, in these documents, the specific words they choose mean everything. Last year, the key phrase was all about using growth to keep things stable. Basically, do what you need to do to hit the numbers. But this year, the focus has completely shifted to improving quality and increasing efficiency. Now that might sound subtle, but it's a massive change. It tells us that Beijing is now okay with a slightly slower pace, as long as the growth is high value and built to last.
So what does quality actually look like on the ground? It's not just some buzzword. The policy is super specific. We're talking about a huge push into what they call new quality productive forces. That means going deeper on their AI Plus initiative, which is their national plan for weaving AI into every single industry. It means they're prioritizing high-end manufacturing, smart tech, and green industries. And they're serious about building out tech hubs in Beijing, Shanghai, and the Greater Bay Area that can go toe-to-toe with Silicon Valley. These are the sectors getting the full-throated support from the top.
Okay, on to our second signal. With all the uncertainty in the world, China is turning inward and doubling down on its greatest asset, its own enormous market.
And this is the key takeaway here. Growing domestic demand isn't just a goal anymore, it is the #1 priority. The official policy is all about strengthening the domestic economy to make it more resilient. It's a really clear signal that the strategy is to build something of an economic fortress, one that's powered by its own consumers and companies and isn't so vulnerable to whatever's happening in the rest of the world.
And they have a specific toolkit to make this happen. To get people spending, there's a new plan to get more money into the pockets of both urban and rural residents. Plus, they're fine-tuning those popular trade-in programs for big purchases like cars and appliances. Then on the investment side of things, the instruction is incredibly blunt. Push investment to stop falling and stabilize. You can expect that to be driven by a lot more central government money flowing into major projects. But there is a huge anchor dragging this whole domestic engine down.
And this chart just says it all. The core challenge is the property market. What you're looking at here are inventory cycles, and the bottom line is that it's going to take years to sell off the current supply of empty apartments. This is a massive weight on consumer confidence and really the entire economy. So what's the plan to fix it?
Well, they've laid out a pretty clear 3-step plan. Step 1, stop the bleeding. They're going to control the supply of new land for development. Step 2, get rid of the existing glut. This involves the government actually buying up unsold properties and turning them into affordable housing. And step 3, shift the whole market's focus towards promoting higher quality homes to get people to upgrade. It's a really practical supply-side fix for a very, very tricky problem. Our third and final signal is a really interesting one. The government is basically declaring war on a concept they call involution. Now, involution is a term you absolutely need to understand. This isn't just your normal, healthy competition. It describes this destructive race-to-the-bottom dynamic, where companies get stuck in these endless, brutal price wars, just copying each other's features and burning through cash just to stay afloat. In the end, nobody really wins. Profits for the entire industry just vanish, and any real innovation gets smothered. And it seems Beijing has had enough. This quote, pulled directly from the conference documents, is a really strong statement. They're going to deeply rectify this kind of competition. Now, this isn't about killing competition, not at all. It's about creating clearer rules for everyone to play by to encourage a healthier market that actually rewards innovation. So we've decoded the 3 main signals: quality over quantity, firing up the domestic engine, and pushing for a fairer fight. But what does all of this actually mean for you and your business? Let's get right to the bottom line. Let's just break this down. The big push for quality over quantity,
Well, that creates massive opportunities if you're in sectors like AI, green tech, or advanced manufacturing. The risk, though? If you're in a more traditional, low-margin business, you should expect to feel the pressure to upgrade or get consolidated. Next, the focus on the domestic engine. This is a clear runway for consumer brands and anyone in infrastructure or urban development. The risk is simply timing. What if that consumer rebound is just slower than everyone hopes? And finally, this move towards a fairer fight. The upside is huge. Fewer cutthroat price wars, which is great for profits. The thing to watch for? Definitely an increase in regulatory checks for any kind of anti-competitive behavior.
Look, understanding these big strategic shifts is the first step. But to really capitalize on them, you have to know China to do better business. Save time and money with expert insights on China trade and investment. And that's exactly what this channel is all about. We bring you practical knowledge to navigate the business, the investment, the culture, and the economic trends. If this breakdown helped you, please press like and subscribe now for more actionable insights and win-win solutions. You don't want to miss the chance to really understand and succeed in your trade with China.